Hey, Karli Spahr here with the Spahr Team at OneTrust Home Loans, and I am here to tell you that the Fed raised the interest rates by 0.75% in case you were under a rock and hadn't heard. Anyway, that is not what is impacting the market right now. In fact, that was baked into mortgage rates prior. It's the comments that Powell made after releasing the report. In fact, I was watching the live feed, and at the time, he said that the rates will rise higher than expected to combat surging prices. The market reacted in a big way and has been reacting ever since. What caused the craziness was Powell being all dovish, calm through the speech, and then when the questions came in, he went all full hawkish on rates. He said things like, it is premature to be thinking about pausing, and the ultimate level of interest rates will be higher than previously expected. I mean, seriously? You couldn't just leave it be knowing that the market is hinging on every word you say? Okay, I'm off my soapbox. So what does this mean for you as an agent, a buyer, or a seller? I still stand very strong by my stance that purchasing real estate has always come out on top in the long run. In fact, right now there's less competition. There's more creative lending programs available that can help buyers as compared to before when rates were lower. You're not overpaying for houses like you were before when that competition was so strong. There's opportunities for renovation. And by the way, we have some really amazing fix and flip and renovation programs for investors for as little as 10% down. Of course, we have renovation loans for primary homes, second homes, regular investment properties with as little as zero down, depending on the program. So my point being, there's a lot of things out there, a lot of opportunities for buyers. So let's talk a little bit about the current housing market. I don't want you to confuse what is happening right now in terms of the drastic slowdown with the bubble or anything close to what happened 15 years ago. So then what is the difference? Supply and demand is the main difference. Before we had an oversupply of inventory, people were getting foreclosed on, losing their homes. They couldn't sell their homes because they were upside down. So there was this excess inventory. And then we had a lack of buyers or lack of demand because there was decreased lending capabilities. There wasn't very much available anymore. People couldn't qualify like they could qualify before. So you had this oversupply, decreased demand, which in turn drove home values down during that time. Right now, we don't have anything similar to that. In fact, we still have excess demand compared to supply. So as long as that happens, not at the level we were at before where we were having very, very little supply and excessive demand, but it's still an oversupply of demand. So what is happening is we are seeing stabilization of housing to some degree. You're not overpaying for housing. They might be sitting on the market a teeny bit longer, but that is normal for houses to sit on the market. Double-digit appreciation isn't happening. Again, that is not normal, and that shouldn't continue to keep a healthy housing market. So let's talk about the rest of the economy, which is still humming along very strong. The jobs report came out strong. Unemployment's coming out tomorrow. It's very likely going to come in just as good as it was before, meaning it's not going to go up drastically. The JOLTS numbers came in, they're way up. ADP numbers went up. GDP is up. Consumer confidence is up. Car sales are up. People, stop spending so much. This is part of what's happening in the market and why the Fed is trying to curb inflation, because we're still spending, which, it depends how you look at it. Is it good or is it bad? Right now, it's probably pushing that can down the road. So as long as the economy continues at the pace that we're on, we very likely may not see rates drop until much later next year, 23 or into 24. The Fed wants us to get to 2% inflation. We are at 8% right now, so we have a long way to go yet. So what exactly is going to happen at the next Fed meetings? A lot of that is going to depend on the reports that are coming in. Karli Spahr with OneTrust Home Loans. Have a great day.